With improving market conditions, investors have now set their sights on AELF, an AI crypto which has recently started showing a bullish pattern. The token is slowly making its way towards an uptrend thanks to a cup-and-handle pattern, with analysts believing that it may soon make a move towards the $2 mark. Over the past month, AELF price has surged by 25.5%, which complements the weekly increase of 3.26%. While the token has experienced a slight decline of 2.35% in the last 24 hours, this is viewed as a minor setback before a potential major rally. The official white paper describes AELF as a sophisticated Layer 1 blockchain, relying on modern C# programming and .NET's extensive libraries for reliability and scalability. With its multi-layered architecture, this blockchain has gained recognition for its state-of-the-art AI integration and adoption of modular Layer 2 Zambian Quadrarolp technology. The blockchain project is known for developing machine learning models for smart contract optimization. The idea is to optimize gas fees by finding gas-expensive patterns and minimizing or removing their inclusion from the smart contract code. When it comes to enhancing operation execution, AELF has taken a page from Google Cloud AI's resource optimization services, forecasting transaction allocation while allocating resources in real time. The same efficient model has been established for user experience. AELF leverages NLP models like GPT-4 and OpenAI's Codex, allowing users to generate smart contracts based on natural languages. Other aspects native to blockchain, like democratization, have also been adopted using artificial intelligence. The 3-day interval candle chart on TradingView has revealed that a cup-and-handle pattern has formed for the AELF price action. The key resistance levels are 77 cents and $0.8025, while the key support is $0.4446, with 99 cents acting as the neckline. Crossing that threshold would indicate strong community support and a bullish sentiment, making $1.9094 the next key target for AELF to reach, a level it hasn't surpassed since 2018. Achieving this would bring it closer to challenging its all-time high of $2.44, reached in January 2018. While the handle has formed due to a decrease in trading volume, a significant sell-off capable of breaking below the support level would invalidate the predictions. For now, analyst predictions for this crypto remain bullish. While the technical aspects suggest a potential rally, the community sentiment around AELF is also positive. According to CoinMarketCap, 86% of followers are bullish on AELF. A recent update on the top shared post revealed that DWF Labs has received 4.7 million AELF tokens, equivalent to $2.57 million. On the development side, AELF is introducing multiple updates, including the version 1.12.0 upgrade scheduled for December 25, 2024, at 10 a.m. Greenwich Mean Time. This new update will reportedly introduce better APYs, better cross-chain indexing, and inject multi-transaction capabilities into the AELF ecosystem. The lowest that the AELF price has ever been is 3 cents, according to the weekly charts. Since then, the token has been on an uptrend, albeit with a somewhat jagged pattern fluctuating around the 200-day SMA. If the cup-and-handle pattern holds and the token crosses the $1.90 barrier, it could potentially reach its all-time high by Q2 of 2025. However, if the key support level is lost due to a major sell-off in the near future, the pattern will be invalidated, leading to a bearish price action for the AELF token. However, this seems unlikely since the community sentiment and the updates around this project give us a positive outlook. The overall sentiment among the crypto community for the AELF token is bullish, with only a slight level of doubt due to concerns about market uncertainty. However, updates are being regularly shared with the community, keeping them informed. With Bitcoin's recent rise, investors are increasingly turning to utility assets like AELF, especially as the ecosystem continues to grow with multiple decentralized applications such as Project Schrödinger, Portkey, and more. AELF is no doubt one of the most interesting projects currently. It is a decentralized and self-evolving cloud computing blockchain network that is trying to develop a new operating system exclusively for blockchains. The project has also just moved into testnet phase in July, with some positive improvements being made to the protocol. However, can AELF really cut above the crowd and stand out among their competitors? In this AELF review, we will take an in-depth look at the project, including the technology, competition, team, and token prospects. Blockchains have brought us apps and even app platforms, but not a full-blown operating system like Windows or Linux. But now there's AELF, which does promise to be an operating system designed for blockchains. In fact, the team has said it is creating the Linux system of the blockchain ecosystem. It just highlights how quickly innovation occurs in the blockchain space. First, we had Bitcoin, a peer-to-peer digital currency that could also be considered a simple app. Then Ethereum came along and made it possible to code decentralized apps, dApps, with smart contracts. That's basically an app platform. So, the next logical step is to create a blockchain operating system. This is needed because existing operating systems can't effectively run dApps, and blockchains come with their own disadvantages. Blockchains still need to solve the scalability problem. They've seen problems executing smart contracts, and there's no consensus protocol that is flexible enough to smoothly adapt to new technologies. These are the problems AELF is looking to solve. The AELF team is focused on two main innovations in their search to solve the problems with existing blockchain technology. The first is the creation and use of side chains, and the second is the creation of a new and unique governance system. AELF plans on segregating smart contracts and other resources by using side chains, which will also help the scalability issue. Additionally, they will be using a delegated proof of stake consensus method to give more flexible governance. AELF will have a main chain and many side chains that are used to run smart contracts. The main chain is, of course, the backbone of the entire network, but it is also able to interact with each side chain. The side chains are individually dedicated to a specific smart contract, and they cannot interact with each other. Instead, they transmit information by communicating through the main chain. The side chains connect to the main chain using an index system that categorizes chains into two groups. External chains of high importance, Bitcoin, Ethereum, etc. Internal side chains in the AELF OS. As you can see, the main chain can have side chains with many purposes. Bitcoin and Ethereum could each get their own side chains. Another side chain could be created for insurance, and for another for digital assets. Then, these side chains could even branch further into subchains. For example, the digital asset side chain could have a subchain for each type of digital asset, and those chains could be subdivided even further still. This strategy isn't completely new, as it is similar to the sharding idea in Ethereum. It should work to improve scalability dramatically on the network. By separating functional areas into side chains, AELF ensures that any issues in one area won't impact the entire network. The AELF token will be used by side chains to pay a transaction fee to the main chain for indexing. The fee structure has also incorporated a system where side chains pay smaller transaction fees as their contribution to the network grows. Side chains can also charge fees to their subchains. AELF held its private token sale in December 2017, distributing 250 million tokens, or 25% of the 1 billion total supply of AELF tokens. The remaining 750 million tokens are distributed as follows. 25%, or 250 million, to the AELF Foundation, 3-year vesting period. 16%, or 160 million, to the AELF team, 2-year vesting period. 12%, or 120 million, for marketing/airdrops, 3-year period. 12%, or 120 million, to mining, 100-year period. 10%, or 100 million, to advisors/partnerships, 2-year vesting period. Mining rewards are designed to decrease in a linear fashion over a 100-year period. As of August 2018, only the AELF tokens from the token sale are in circulation. The AELF project was founded by Ma Halbwa, who previously founded Hopox, as well as being the CTO of GemPay and Allcoin. Halbwa was an early blockchain adopter and is considered an expert in the field. He is joined by a number of technical and finance professionals to create a well-rounded team. On the advisory side of AELF, J. Michael Arrington, founder and CEO of TechCrunch, and Joe Shuji, founding partner of FGB Capital, support the team as members of their advisory board. It's also worth noting that the AELF project has received backing from a number of top-tier venture capital firms. Draper Dragon, Blockchain Ventures, FGB Capital, and over 10 other investment firms participated in the token sale. The private token sale reached its hard cap of 55,000 ETH within 2 weeks and had to turn away many interested investors at the time. AELF is still a young project, and as such is in the midst of building out their product. But even so, they've attracted a good bit of attention and have formed partnerships with Network, Theta, and Decent, among others. With the token sale occurring in December 2017, the AELF token began trading during quite a tumultuous time in cryptocurrency markets. The price rocketed from its opening price of roughly 87 cents to its all-time high of $2.61 within weeks, but then quickly fell again as the entire cryptocurrency market came under pressure. In conclusion, AELF is a pretty new project and competitor in the DApp ecosystem, but that hasn't stopped it from gaining good support from the venture capital arena. It's also getting good partnerships to support it as development moves forward. This shows that its unique governance model and the use of side chains to control resource usage on the blockchain are being accepted as suitable for a blockchain operating system. Of course, the project is behind other more developed similar projects, but that doesn't mean that its solution could end up being the best choice for the development of a side chain-based operating system. Plus, AELF could see great benefits from the flexibility and scalability of its network. The drop in the coin price could be disappointing to those who got in when the token was launched, but it's not out of line with losses being seen across the cryptocurrency markets since the start of the year. It's certainly too early to say it's too late for this ambitious project.